What's up, everyone? I developed a calculator that's going to help you determine whether or not you should keep on renting or if it's time to make a move into home ownership. So stay tuned. Welcome back, everyone. My name is Robert Carrillo. I'm an associate broker and realtor with eXp Realty. I'm excited about today's episode. In today's episode, I'm going to share with you a calculator that I developed to help you determine whether or not you should keep on renting or if it's time to make the move into home ownership. All right, so let's get right to it. You can download the app on your phone as well as on your computer. And this is what it looks like on the website. Right, so anything that you see that has a minus or a plus in between it is a variable, meaning that you can change it. You can add it or subtract it by singles, or you can just put in a number. So here for the current monthly rent, let's just start with $1,200. If yours is more or less, that's what you'll put in there. Over in this tab, you'll see extra available per month. If you've got more money coming in that you're not currently paying towards rent that you can add on here, that's where you will put that. So in this case, let's just say you have an extra $300 a month. So that brings your total monthly housing budget to $1,500. Now with this calculator, we're going to work backwards for a little bit so you can see something. Right? So that's why you're seeing home financing right away. So let's just assume, all things being equal, that there were no taxes, no home insurance, and no private mortgage insurance. I'm just going to run through this, and then we'll come back to take a look at how to use this a little bit more effectively. So here we go. Your proposed interest rate, right now, let's just assume these are all assumptions, right? I'm just making an assumption. These are all assumptions. You will put in based on where your credit score is or where your standing is, okay? But for the most part, I'm just going to assume a decent credit of somewhere. I think for this purpose, we'll use 660 to get some interest rates on here. Most of these terms, proposed terms, you're going to put in 30 years, especially if you're a first-time home buyer, you're putting 30 years. And then down payment, if you're a first-time home buyer, you are putting down 3.5% as a down payment. All right. You do that, it'll create and tell you what the maximum purchase price of a house is that you can buy. In this case, it's $346,000. Your down payment will be $12,000. This is assuming that your $1,500 housing expense is completely converted into a mortgage. And so that's the calculator in a nutshell. However, and now this is where it gets the purpose of the calculator really comes in handy, right? Because this sort of math can be done on a regular Excel spreadsheet. But now there are three major expenses that you need to consider and that lenders will consider when making a loan to you. That is real estate taxes, your proposed monthly home insurance, and then private mortgage insurance. I'll have definitions for all of these in the description. But so you don't know what the real estate taxes are going to be on anything right now. In San Bernardino, if you're looking essentially in San Bernardino, and it depends on where you are, right? The different cities, different counties all have different rules on how they assess property taxes. In San Bernardino, you can basically say that your purchase price, 1% of your purchase price, is more or less what your real estate taxes will be. Okay, now depending again on the specific city and whatnot could change a little bit, but we'll use that as a general rule of thumb. If you're in a different city or you know exactly how the real estate taxes are going to be determined, you can go ahead and put that in here and calculate that in here. However, this gives you an idea. So if you know more or less that, let's just look at $346,000 as your max purchase price. 1% of that is going to be $3,461, right? So you can use that as a roundabout number in your taxes here. Okay, so 1% of the purchase price. that's going to have an impact on this purchase price. And I'm going to show you in a second. So let's just put in 3,000. 3,000 means a purchase price of about 300,000, right? 1%. And the reason I'm putting that in here is because that is going to impact the actual value of what you can buy. So look at that. That $3,000 real estate tax per year actually means on a monthly basis that you cannot afford, right, the 1,500, and it becomes 1,250 a month for available for your mortgage, which translates into a loan of 288,000, right? And now that you know your loan is going to be about 288, you can then come back over here and say, you know what, it's going to be about 288. And then you'll see that this changes and this will go up some, right? So we're going to keep playing back and forth with this, but we'll just keep it at that. Let's just keep it at the 288 because that seems to be, actually, let's just keep it at 3,000. All right. The next thing that's going to be taken into account is your home insurance, right? Now, this again depends. This is a variable. It depends on your credit. It depends on the value of the house, any kind of goods that you have. So that's a variable. With $100, you can cover a house that costs $300,000. All right. You just got to go out there and find the right home insurance company. So look, that $100 month insurance, look at what it does to your availability on the monthly mortgage. And so now your max purchase price is $260,000. All right. This is an important calculator because a lot of folks sometimes say, hey, I pay $1,200 a month in rent. That can just be a mortgage, right? And so then you go in and someone who doesn't know any better or someone who doesn't make all of the connections, actually we're going to make this 30 years. Someone who doesn't make all the connections can just say, hey, $1,200 is equal to, and they'll give you a mortgage amount, right? But it doesn't take into account these other expenses that you have to consider because your lender will consider them. All right. So PMI, private mortgage insurance. If you're a first-time home buyer and if you have less than 20% equity in your property, chances are you will have PMI. Private mortgage insurance is not home insurance, right? I'll get into a little bit more, but essentially private mortgage insurance is protecting the lender, not you, right? It's protecting the lender's investment, the lender's loan on you, okay? So typically this is based, again, this is a variable and it is based on your credit, the loan amount, a whole bunch of different things. So there is a rate to it, and today's rate is 0.58 all the way up to 1.86. So you would take that number, one of those numbers, and multiply it by your loan amount. All right, we're going to go with 1%, which will mean, you know what, let's just put $200 a month. It could be lower, it could be higher. I'm being conservative. But again, what it does is it reduces your available monthly mortgage payment money. And so in turn, it reduces your purchase price. So now your max purchase price, we started at about 300 and something thousand, but you include all of those expenses that are necessary and mandatory. And now your purchase price is down to 219. Then you can go back and now this real estate tax number could be a little bit more real. So let's just put 2,200, right? That'll increase your monthly mortgage. And so look, now you can buy a little bit more, right? So that number will fluctuate. So this number goes up and down, but there are other variables. For example, your interest rate, right? If your credit is better or worse, this will determine your interest rate. Better credit will lower your interest rate. Look, if we lower it just this much, look at what it does, right? It increases your available monthly mortgage, which also increases your purchase price. So let's just do it one more time. 3.5, see what it does. 1017 a month, 234,000. If you had something like 3%, right, that 1017 still stays, but now you can your purchase price goes up to 250. Now, if you had on the other side, if you had a 4%, and you can purchase up to 220. All right. So a lot of variables go into determining this purchase price. So let's just say your credit is, let's just go with 3.5. All right. So your max purchase price is 234,000. Now this is the part about the calculator that I really liked over here. Right? Over 30 years. So here we're going to do an analysis. Over the 30 years, right? You determining this. How much does your rent go up every year? Is it 2%? Is it lower than that? Is it more than that? You'll determine that, right? So, but what this is saying is that let's assume that your current rent, you're getting 2% annual increases. Okay. Over the 30 years, this is how much you're spending out the window in rent. All right. $584,000 in rent over the 30 years. Over that same 30-year period, right, we're using a very modest 2% home appreciation, very modest, because in San Bernardino, just last month, I can tell you was 2%. So again, it depends. The real estate market is cooling in the sense that acceleration or the appreciation isn't as rapid as it was about over the past 18 months. That is slowing down some. So this 2% really in San Bernardino right now, I'm gonna go with, let's just go 3%. We don't know what's going to happen 5 years from now, but I'm telling you this. I know that in 2020, this is going to be over 5%. In 2023, probably over 5% as well. I get into that in other episodes, but let's just go with the 3%. And so your property over the course of the years will gain $318,000 in equity. All right. So the net difference between losing and gaining is about $900,000, almost $1 million worth of equity that you can make up by buying today. So the calculator will tell you, should you buy or rent? It does, I have a formula in there, and this is telling you that you need to be buying right now, right? Even though the $1,200 or $1,500 budget isn't all going towards a mortgage, right? Enough of it is, 1017 of it is for a purchase of 234. And so then now is, what can you purchase in San Bernardino for $234,000? Reach out to me. Let's figure that out. I got you. All right. But let's just go a little bit further. This calculator goes a little bit further. All right. Again, I developed this. And if you have any comments, please feel free to reach out. Drop those comments below. If you have ways that I can improve it, I'm always working on making things a little bit more efficient for you. And so here they go. So we go down a little bit more. Usually, right, if we say, usually your lender will say that your housing expense can't be more than 30% of your gross income. So that's the number that I'm using here. That's a variable, right? It depends on your lender. That could be a number that you set for yourself. You can say, you know what? I'm not going to spend more than 30%. I'm not going to spend more than 50%, or I'm not going to spend more than 20%. You determine how much of your gross income you're going to spend on your housing. All right. And so if you, in this case, if we're saying in order to get this, again, this $1,500 monthly housing budget, 30%, you need to be making at least $5,000 a month gross. If you want this to be 50%, right? Then you need to be making $3,000 a month gross. If your bank says you cannot be over 23% because they do certain calculations, then you need to be making $6,500 a month. All right. Look, share this calculator with your friends, family, anyone who is in the market, and then share my info and let me help you get into that house. All right. I hope this was helpful. You can download the app. It's in the description below. If you have any questions, feel free to reach out. My info is below. Stay tuned for the next episode, which is going to be a little more detailed, because I want to get you guys to, even if you feel like you can't purchase right now, rent to own. If you're interested, let's connect, but we will make it happen. Stay tuned. All right. Stay tuned for that. Hey, if you haven't already, subscribe to this channel, man. All right. Peace.